Hello.
Managers can't really effectively evaluate how they're doing unless they can quantify their costs of operating the business and really understand the nature of those costs. And we're going to introduce you to two new terms. The terms relative to understanding the cost of operating a business that we want to introduce are product costs and period costs. Product costs are the costs associated with our product, our goods or services offered to customers. It's the cost of our merchandise, if in fact we're a merchandiser, or it's the cost of making our product, if in fact we're a manufacturer, or it's the cost of our services, providing the services to customers if we're a service-oriented business. All of the other costs of doing business outside of the product costs are referred to as period costs. Period costs are all of the other costs of operating a business. These costs are sometimes referred to as simply operating expenses or as selling and administrative expenses. You know, this should make sense. I mean, think about a merchandising business, for example. The merchandising business, they have the cost of their product, their merchandise. All of the other costs are costs associated with trying to sell that merchandise or administer the business. All businesses, whether they be merchandising, manufacturing, or service business, will have two broad categories of operating costs, and they're referred to as either product or period costs. To better understand these two kinds of costs, product versus period costs, let's first kind of focus on a merchandising business. You know, a business like Walmart that buys and sells a finished product. They don't actually make anything. They're simply in the distribution business. A merchandising business such as Walmart has product costs. The cost of their product is the cost of the merchandise that's actually sitting on their shelves. The merchandise that's sitting on their shelves waiting for and hoping for resale, well, that merchandise is referred to as inventory. So what I'm really saying here is that the product cost of a merchandising business is the cost of the inventory that is purchased for resale. In fact, the journal entry that we make when we purchase inventory is to debit inventory and credit either cash or accounts payable if we're purchasing that inventory or merchandise on account. And what I'm simply saying is the product cost is the cost of that inventory. Now, when inventory is sold, if a customer comes into Walmart and takes some of that merchandise and pays for it, then we're going to account for that product cost, the cost of the inventory, ultimately as cost of goods sold. In fact, the journal entry to reflect the outflow of inventory or the outflow of the cost of the inventory is to credit inventory and debit cost of goods sold. The period costs for a merchandising business are the selling and administrative costs of that business. Now, let's think and consider what are the selling and administrative costs associated with Walmart. What about the costs of salaries and wages for personnel who are stocking the shelves? Is that a cost of the merchandise, or is that a cost associated with selling the merchandise or administering the business? It is not a cost of the product. The salary and wage of personnel who are stocking the shelves, what they're really doing is they are trying to facilitate or assist in the selling process. The cost of that kind of personnel would be a period cost or selling and administrative cost. You know, the salary of employees who are handling the checkout counters there. Is that a cost of the product? No, the cost of the product is the cost of the merchandise. The person who is working the checkout stands, what they're involved is again facilitating the speedy service or sale of the product to the customer. What about the store manager? Well, is that a cost of the product? Not really. That person and the cost associated with the salary of the store manager is really a cost of administering the business. All of these kinds of costs would be reflected as an expense in the period in which it is incurred, and we would account for it by making a journal entry, by debiting either selling expense or administrative expense or selling an administrative expense, and crediting cash or wages payable or salary payable or some kind of a payable if we're not paying that expense currently. And what I'm really saying is that any of the costs of selling a product or administering the business will be reflected as an expense in the period in which it's incurred by simply debiting an expense, maybe a summarizing account like selling or administrative expense. Some of the other costs that Walmart incurs are the costs of their building. Let's assume for a moment that Walmart actually is renting their facility. Well, if Walmart rents the facility, they're going to incur some kind of a rent cost, a rent expense. Is that a product or a period cost associated with their operations? Well, it is not part of the cost of the merchandise. The cost of the product cost of Walmart is simply the cost or the price that they pay for their merchandise, the cost of the inventory. The rent expense associated with the building, well, you can't sell that product or administer the business unless you have a facility in which to do it in. What I'm suggesting is the building cost for a Walmart store is really a selling or administrative cost. All of the utility costs for that store, to have the lights on and the equipment running in terms of the checkout counters and these kinds of things, all of those utility costs are not the cost of the product. They're costs that are incurred to facilitate the sale of the product or to administer the business, and therefore would be included in the category of period cost. If we were to look on the balance sheet of a merchandising business like Walmart and look specifically under the current asset section of the balance sheet, you will see the category of an asset called inventory. A company's product cost, the cost of their merchandise, is first reflected as an asset, inventory, on the balance sheet. But as that inventory is sold, then the cost of that inventory is then reflected as an expense called cost of goods sold on the income statement. What I'm saying is that product costs are first an asset, inventory, that become an expense or a cost of doing business only as that inventory is sold. The term cost is not synonymous necessarily with expense. For example, if you buy a truck, you may say that truck cost me $20,000. But at this moment, that truck is not an expense, it's an asset. Now, we may account for it as an expense over time as we depreciate that asset. But when we originally purchased the truck and its cost is $20,000, that is the cost of an asset. It is not necessarily an expense, at least not yet. I'm saying the same thing when we use this term product cost relative to inventory. The cost of the inventory, its cost, the product cost, is first an asset. It is only an expense, or these costs become an expense, as we sell that inventory. So what I'm saying is that the product cost will be reflected first in the balance sheet and then on the income statement as that product or inventory is sold. Period costs, however, are recognized as expenses in the period in which they are incurred. And so typically you will not see period costs as an asset first. They are simply reflected as expenses on the income statement, typically under operating expenses as selling or administrative expenses, if you're going to, kind of summarize them in one category. And there are expenses in the period incurred, typically not reflected as an asset first. Okay. Well, identifying product costs and period costs in a merchandising business is fairly simple. Where it becomes a little confusing and certainly more complicated is in a manufacturing business. Now, we haven't really talked about manufacturing businesses much up to this point in time in the course. In fact, when we were back, in financial accounting, talking about things such as inventory and cost of goods sold, we always used an example of a merchandising business that simply bought merchandise, called it inventory, and then sold that merchandise or inventory, and the cost of the product cost, was then reflected as cost of goods sold. That was really review of prior material covered in financial accounting. We are going to now kind of shift our focus and look in a lot more detail at manufacturing businesses. And what I want to do first off is identify and distinguish product costs in a manufacturing business. Now, let's assume for a moment there's a manufacturing business. Now, the product cost for the merchandise, our merchandise, which we are making from scratch, those product costs are all of the costs of manufacturing those products that ultimately we're going to be selling. Is part of our product cost referred to as direct material costs. A second category of product costs in a manufacturing business are direct labor costs. You see, you don't have a product unless you actually have somebody actually make it in a manufacturing business. The cost associated with salary wages of labor that is directly associated with kind of assembling that sofa or putting it together, whether it's, somebody that has a lot of talent or not, the cost of that labor is part of the cost of that product. And we'll reflect it or refer to it as direct labor costs. In addition to direct materials and direct labor costs, the third category of costs of manufacturing is sometimes referred to as manufacturing or factory overhead costs. These are other costs that are incurred simply as a result of the fact that you're making your product. For example, we might even establish within manufacturing or factory overhead three categories within that title or that description. For example, you may have what I'm going to refer to as indirect material costs. Indirect material costs are the costs of materials or supplies that are needed in the manufacturing process, but don't actually end up in the final product. It isn't fabric that is actually on the sofa, but it's some materials or supplies that are needed in the manufacturing process to facilitate the process. For example, if you're making tables and chairs, you're going to need some sandpaper. Now, sandpaper is a material or a supply, and there's a cost associated with the sandpaper. And really, if you're going to make the table, you need sandpaper to make it. But the sandpaper isn't an integral part of the actual final product. I mean, you don't have sandpaper, pasted on the furniture. It's just a product or a supply or materials that you're using to facilitate the manufacturing process. Any kind of factory maintenance supplies. For example, if you have some solvents and cleaning materials or that you have to maintain your factory. Now, those solvents aren't actually used in making the sofa, but they're indirectly used in making the sofa because you need to clean, the manufacturing facility for it to operate and function properly. These are costs of manufacturing, but they're not direct costs. They're really indirect, and we'd refer to them as indirect material costs. Factory maintenance supplies and production supplies might fit within that category. We might also have within manufacturing overhead something that we would refer to as indirect labor costs. These are the costs of salaries and wages of employees who are involved in the manufacturing process, but they're not the salaries and wages of personnel who actually have their hands on the product in its actual assembly or manufacture. For example, manufacturing supervisors. These are the men or women who kind of walk around the manufacturing facility, supervising, giving advice and counsel, approving, authorizing, making sure that the manufacturing facility is running efficiently and effectively. The cost of their labor is not a cost that is directly associated with making the sofa, but you need supervisors in order for the manufacturing facility to run, efficiently and effectively. So it is a cost that is associated with the manufacture of the product, even though it's not direct. It's really indirect. It is a cost you're incurring to make the product. And we will include that as a product cost under the category of manufacturing overhead costs. If you have quality control inspectors in the manufacturing process, again, that would be an indirect labor cost incurred with the manufacture of the business, of the product, but not the direct labor of making it. Manufacturing equipment and factory maintenance personnel, again, would be an area of indirect labor costs. Production or product designers and engineers, those people who are actually involved in creating the specifications on how to make the product. See, what I'm including here are any costs that could be avoided if you weren't making the product. If you're not making the product, you don't need somebody to design the material specifications for the manufacture of a product. If you simply are buying finished sofas, you're not going to have manufacturing supervisors or quality control inspectors or factory maintenance personnel or product designers. So any cost that effectively could be avoided if in fact we weren't in the manufacturing business is a cost associated with the manufacturing, whether it be direct or indirect, as we're discussing here in manufacturing overhead. Another area of manufacturing overhead costs, the third area, might be simply referred to as other overhead costs or other stuff. What I'm talking about is the cost of the factory. For example, the building. If you have any costs in renting that or depreciation of the building that is used for the manufacture, that's a cost that you wouldn't have if you weren't making the building. So it is a cost of manufacturing, although it's pretty doggone indirect to the actual manufacture of the sofa. It is a cost of making the product. Factory utility costs. I mean, you can't make the product unless you have some of the equipment and machinery, lights on in the factory. So it is a cost that is necessary in the manufacturing process, but it is not, so direct relative to the materials and labor of making the specific sofa. Insurance costs, property taxes for the building or equipment in the manufacturing area, depreciation of equipment. All of these would be costs specifically attributable to the manufacturing process, even though they are somewhat indirect in their nature. All of these costs, whether they be direct materials or direct labor, or any of these other manufacturing overhead costs, are all costs associated with making your product, and therefore will be referred to as product costs. These product costs are accounted for first as an asset. Your product is your inventory. And so as you incur these product costs, whether they be direct material costs, direct labor, or manufacturing overhead, all of those costs will be included as part of the cost of your product, which is your inventory and is an asset until that product is sold. And at that time, all of these costs, which have been included in as part of the cost of your inventory, will then be accounted for as an expense as cost of goods sold. What I'm suggesting is that, again, product costs our first inventory before those costs are reflected as an expense. And in a manufacturing business, it's probably worth noting that there are really three categories or phases of inventory in a typical manufacturing business. For example, you are going to have probably in a manufacturing business a location or area in your manufacturing facility where you store the raw materials, lumber, fabrics, springs, nails and glue, and all of these kinds of things, including some of your other operating supplies like maintenance supplies and sandpaper and stuff. You're probably going to store those raw materials and other manufacturing supplies in some designated area in the manufacturing facility so that it can be easily accessed when you need it in the manufacturing process. If in fact you have those kinds of direct and even indirect materials on hand, those materials are an asset to you. They have probable future benefit and should be reflected as part of inventory. We'll refer to it as raw materials inventory. Now, as we actually begin the production of, for example, a sofa, and requisition or get some of those materials out of the raw materials area and put it into production so that we start to actually now cut the lumber and the fabrics and assemble a sofa, what we have is a different or secondary phase of inventory called work in process or work in progress inventory, typically referred to simply as WIP, W-I-P, inventory. Now, in work in process inventory, again, you're going to have all of the cost of the materials that are being used to make the sofa as it's in process, manufacturing process. But at this point in time, you start to also incur the cost of direct labor, the cost of the employee who's actually doing the assembly. And all of the other manufacturing overhead costs, utility costs, theoretically should be applied as you start to manufacture this process because you're starting to use the building and the utilities and indirect materials and supervisors are observing it. So all the other indirect manufacturing overhead costs are starting to become incurred relative to making the sofa once we are in work in process. When we finally complete the sofa, we're probably going to have again an area in the factory or nearby where we actually store the finished sofa until we deliver it to a customer. While it's there finished, waiting to be delivered to a customer, it is still an asset to us. It has probable future benefit, and we would refer to it as probably finished goods inventory. So we will have really three stages of inventory: raw materials, work in process, and finished goods inventory associated with the product cost. When we finally sell finished goods, all of the costs incurred, materials, direct labor, and manufacturing overhead costs, which have been accumulated first in work in process, raw materials, first in raw materials inventory, and then in work in process, and finally accumulated in the finished product called finished goods inventory. All of those costs will then be transferred and reflected as part of the cost of the goods sold, so that we can really reinforce our understanding of the distinction between product and period costs.